What is leverage? CFD trading allows traders to use an additional tool called leverage. Leverage is used by traders to borrow extra funds from brokers. Like in mathematics, leverage increases the trader's initial investment by a certain percentage, but it also puts it at risk. As leverage poses serious risks for traders, especially in periods of high volatility, it should be used with attention and caution. So, how does leverage work? Let's study two examples. John has decided to open a CFD position and invest $100 in stocks of company A, expecting them to grow in price. John uses the 1-to-1 leverage, which means that his profit will increase by 1% if the stock price grows by 1%. So if his forecast is right, John will gain $1. Having the same amount of money, $100, Stephen decides to use the 1-to-10 leverage. In this case, if the price grows by 1%, Stephen's profit will increase by 10% and will result in $10. But what if the price goes in the wrong direction? In this case, the losses will multiply accordingly, but you'll never lose an amount larger than your original investment. On our platform, leverage is located in the right menu just below the amount settings. Note that leverage may differ depending on a broker, the type of an asset, and the time of a trading operation. We wish you a pleasant trading experience.